Taxes are usually one of your biggest expenses. Most people focus on earning more, but never think about how they're taxed. Things like pension contributions, timing income, and making use of those allowances which you have can dramatically lower your tax bill. Keep more of your money to spend on things that matter to you the most, and keep less away from HMRC. 5 quick tax tips which could help you keep more of your hard-earned money. Do you earn over 100,000? Then this might hurt to hear. You may be hit by an effective tax rate of 60% on some of your earnings. Your personal allowance starts to disappear by £1 for every £2 your income exceeds 100,000. At 125,140, your personal allowance is lost. This creates an effective tax rate of 60%. That's your 40% high rate tax plus 20% for that loss of the personal allowance. But there is some positive news. You can reduce that unnecessary tax drag with the right planning by taking some few simple steps. A lifestyle planner like myself can model all those different scenarios for you, so you keep more of your hard-earned money rather than losing it to tax and HMRC. A good place to start is by downloading a copy of our High Earners Guide to Smarter Tax Planning. Not all tax planning needs to be complicated. ISAs are still one of the simplest ways to grow your wealth free of tax, and they can make a real difference over time, especially for high earners. Where your investment sits matters as much as what you invest in. An expert can help you use your allowances intentionally. Perhaps we need to look at higher growth investments or income-producing investments, which would shelter your hard-earned wealth the best from tax. Our guide explains how our high earners can make the best use of their ISA allowances. Pensions may not sound very sexy, but they are one of the most powerful financial planning tools out there for high earners. When you make a pension contribution, the government adds at least 20% to that contribution. So it means for every £80 you pay into a pension, effectively £100 goes into that scheme. But if you're a higher or additional taxpayer, there's even better news. You could claim up to a total of 40% or more tax relief through your tax return. Plus, your investments grow free of UK tax. If you have sufficient earned income over and above the 60,000 annual allowance, you can make use as well of any unused pension allowances from the previous years using something called carry forward. It's about understanding your allowances and aligning your pension strategy with your long-term retirement goals. The average inheritance tax bill is over 200,000 and yearly receipts continue to rise. It's a growing concern for high earners and those with wealth, and it continues to be under the spotlight with the government making changes. So far, HMRC has already collected £5.8 billion this tax year, and it looks like it's going to be another record-breaking year. Without planning, a significant portion of your wealth can be lost to the taxman rather than going to those you love. With the right advice, it's possible to structure your assets efficiently by making the best use of gifting allowances and passing on your wealth to those you care about over time. A lifestyle financial planner can help make sure your estate planning reflects your intentions, protects your family, and stays up to date with ever-changing regulation. Capital gains tax can quietly erode investment returns if it isn't planned for. High earners can face even more capital gains tax on assets and potentially even higher rates of tax in specific investment structures. With coordinated planning, disposals can be timed more effectively, allowances used efficiently, and transfers between spouses can be considered where it's appropriate. The goal isn't to avoid tax, but just to manage it sensibly over time so you get to keep more of your investment growth. A lifestyle planner can help you make smarter tax moves, protect your family wealth, and get ahead of that curve. A good place to start is by downloading your free copy of our High Earners Guide to Smarter Tax Planning.